Hi everyone again. It's Jerry Dupas here with Rate in Crystal Lake, and we're doing another episode of the Achieving the American Dream podcast. And today I have a really wonderful guest with me, Kate Keefe.
Hello.
Who is with Compass and Team Open Doors in Woodstock, Kim Keefe, Team Open Doors. So Kate is actually the daughter of Kim Keefe. Kim is one of the most prominent realtors here in our county, and she's grown up in the business and went and had the hunger to get involved and be a part of it, and took her real estate license and went through the whole process, and here she is.
Here I am.
Here you are.
Even though I said my whole entire life I would never be in real estate.
What changed that?
Well, I have a great access point in my mom.
That's right.
And just being my own boss and making my own schedule sounded really good. And just being with people, helping people every day,
yes,
also great.
That's what we love to do as far as helping people every single day. So Kate wanted to go through and kind of interview me a little bit and kind of ask some questions to a lender, questions that first-time home buyers and things might have. We're trying to educate the community and let you know what's out there and available. So did you have some questions for me?
Yes, I do. Just a little backstory on this too. This whole idea came from me having this hot take per se that a lot of home buying is not necessarily a lack of access. I understand that that's the hot take of it all, but it's not a lack of access, it's a lack of education and knowing what is out there, knowing what options you have in the home buying process. And a lot of that has to do with finances and where am I getting all of this money for a down payment? Do I need $20,000 is like the biggest question that I think I get asked. So that's why I really wanted to come in here and grill you on the tough questions.
All right, well, let's get to it then.
All right, first up, what is your favorite, I thought I would never be able to buy a home story, and what was the change that flipped that?
Okay, so I do remember this couple specifically. Their realtor was trying to refer me, or basically trying to get them to call me for what seemed like almost a year. I mean, literally, she was always, saying, "Did they call yet?" I'm like, "No, not yet." And she really didn't want me to kind of reach out. She just wanted them to make the first step and whatnot. They were just afraid of some things. They were afraid of their credit score being too low, which it was a little bit lower. They were afraid that they didn't have enough money saved up, and they didn't have a lot of money saved up. So she finally convinced them to give me a call because she saw, other transactions that I was doing for people that had lower credit scores, and they really didn't need all that much money at the closing, So when they finally did call, we start with a soft credit pull. So we pulled their credit, and it was below the minimum to get down payment assistance because they did need down payment assistance. We don't have a minimum credit score for FHA loan if you have a certain amount down. But if you want to get assistance for down payment, you need to have a certain credit score. And the minimum with us is actually quite low. It's 600. So he was just, one of the borrowers was just slightly below 600. So I was able, through our systems, to instantly tell him what he could do to his credit. And it always has to do with usually paying down a credit card that's close to the limit to get his credit score up quickly. So he made that, whatever it was, $200 payment to get his credit balance down. And then he provided me with a letter from the creditor saying the new balance, right? And then we were able to do something called a rapid rescore. So literally within 2 days, we had a score up at like a 603.
Oh.
Right? And they were so excited. They're like, "Oh my gosh, there's a program for us. We never thought this would be possible. We've been renting for the last 15 years.
That's a long time.
We see everyone else gaining all this equity." They were very excited that, but where we weren't done yet, that was the beginning stages of getting them pre-approved, figuring out their loan and whatnot. So they were able to use one of our special programs, which we have about 15 different down payment assistance programs. But this program and some others, you can set it up so you really need nothing on the day of closing. You can actually get the money that you paid up front, because you have to pay for certain things up front when you buy a house, right? I mean, like
What are those?
well, you have a deposit when you make an offer. You're going to make a deposit on the house, so it's called earnest money, and that could be as little as $1,000. It could be $5,000. It just depends on how strong you want to make your offer look, right? But let's just keep it simple. And these people only did $1,000 in their example because they didn't have that much saved up. They had about $2,500. I got them pre-approved for this program. They went out looking and they found a house like almost right away. They were so excited. They found a house, great house, and in Island Lake, made an offer on it, and they actually won the bid. And the nice thing was we offered a little bit over the list price, and we asked the seller to give that money back to them in the form of what's called a seller closing cost credit. Okay, so that was structured purposely so that way, because they didn't have money to come with 3.5% down and to pay all the closing costs. They didn't have that. They only had $2,500, right?
Yeah.
So because we were able to structure it that way, when they paid their earnest money for $1,000, they're going to pay about, let's just say $700 for an appraisal, and then the optional thing they would pay for would be a home inspection. It's highly recommended.
Highly recommended, yes.
That's because an appraiser is going to just tell you what the house is worth, and that what you're paying for it is reasonable. A home inspector is going to go through it like a fine-tooth comb. They're going to tell you every single thing that's wrong with that house. So in the future, like what expenses would be for maintenance and things. So that's like what? How much is a home inspection? Like $500?
Depends, yeah, maybe a little bit more. So when you hear people, I hear it a lot.
Yeah.
People saying, I'm just not really in a position to buy a home. What are their reasons as to why they can't? In their own head.
Oh, in their own head.
Yes.
Sure. Well, okay, so a lot of people think that has to do with credit, or they don't have enough money saved up. They might think they have student loans and they can't buy a house because they have so many student loans. That's not the case at all. There's programs and ways to still be able to buy a house, even if you have $100,000 in student loan debt. It's still definitely a possibility to be able to buy a house. So, because student loan payments are reasonable, they're not outrageously high. So, we factor them into what's called the debt to income ratio as far as what their payment will be. Usually it's still workable. Usually you're still able to buy a house. So you don't have to rent just because you have student loans. To go back to that other couple, they only had $2,500. That was it. So the beautiful thing is, when they went to closing, they were able to get that $2,500 back. They were able to get back what they paid for the appraisal, the home inspection, and the earnest money. They got that all back because the seller was paying the closing costs, so they were allowed to get that all back. I got them a down payment assistance for the 3.5% down, so that covered that.
Perfect.
If you think about it, and their payment on this house they bought is less than what it would be if they were going to rent this house. So, but what would they have to do if they went to go try to rent that house? What would they have to spend?
Well, at least the cost,
upfront,
pay the first month's rent,
right,
plus a security deposit, which is normally another month's rent.
If they have a pet?
Yes, pets usually.
It's like a double security deposit sometimes.
Yeah.
So it would have been, they wouldn't even probably been able to do it, to rent a place. They probably didn't have, so they had enough money to buy a place, but they didn't have enough money to rent a place, if that was this scenario, if they were going to.
Crazy.
Pretty insane. So people, think that their credit's a limiting factor. They think student loans. They think they don't make enough money. There's people that's like, oh, I don't make enough. You'd be surprised on what we can get you approved for. You just have to give us a call. We also have alternative ways of looking at income. Some people are self-employed and they write everything off. They're like, oh, I can never buy a house. It's not true with guaranteed rate. We have every single product and program there is, and there's unique ones that have to do with, just looking at your bank statements for the income that comes in for the last 12 months rather than looking at your, tax return.
Perfect. Love to hear it.
Yeah.
You did mention debt to income ratio. Can you kind of explain that a little bit? I know I'm getting off
No,
track.
that's totally fine. And all these mortgage lingo terms, you're not expected to know all of them. That's kind of my job. I'm the one that's supposed to know the programs and where the limits are and to make sure your loan's going to close. But a debt to income ratio is just a way for an underwriter to analyze the ability for you to make that mortgage payment each month, okay? And what they do is, let's just throw out an example, an easy one. Let's just say someone makes $5,000 a month gross income, and they do go off of the gross. Most programs conventional programs limit you to 50% debt to income ratio. So if you take that $5,000, you times it by 50%, what do you got? $2,500. There you go. I
Put me on the spot there.
You're like, man.
I got it. I answered.
You got it, good. So $2,500. Okay, so that is how much they would allow that person to have for monthly payments for everything, for the mortgage, the taxes, the insurance, car loans, credit card payments, minimum payments. Student loan minimum payments, we usually take like a 0.5% of whatever the loan balance is if they're not in repayment. So if they have $100,000 worth of student loans, we would count a payment against them of $500. So now we're left with $2,000 left. So now if that's all they had was student loans, then we could buy a house up to a $2,000 mortgage payment. So that would be the debt to income ratio in that scenario. Every scenario is different, obviously.
Now, if I really put you on the spot now, what could I get if that's me? What could I get for $2,000 a month?
Sure. Well, it's a wide range of options just because every home has different cost. So like a townhouse has an HOA, right? And every single home has different taxes depending on the area that you're buying, right? So it's really hard to tell you like an exact number of what you could buy purchase price wise without knowing what the HOA is, what the taxes are, those type of things. But to give you like a range, I mean anywhere, if it's a townhouse or something, maybe like $210,000. If it's a single family home, we could probably go higher because there's no HOA, maybe like $250,000, $270,000. It just really depends on the taxes too, what the taxes are per year. Because that's part of your principal, interest, taxes, and insurance. You're paying back the loan to us, the principal and interest, then you're paying the government the monthly taxes for living there on the land, and then you got to make sure if the house burns down, they're going to rebuild it, so you got to have homeowners insurance. So those are the factors that go into your monthly payment, So,
All right.
So it's hard to tell you an exact number on that, but that's why you call me and we figure it out,
Perfect. And if I was coming in and I told you, Jarrett, I feel like I only got $2,000 a month to like put towards a house.
Yeah, that was your budget.
That's my budget. That's my top line. I don't want to go over that.
Right.
Can you set a number on the pre-approval or give me a number to look at through that process?
So like I was talking about every house is being different. I mean, the way guaranteed rate and rate is different, the way we operate. The reason I always have 5-star reviews and I've never got less than that is because before anyone makes an offer on a house, they text me either the address or they call me, and we do a detailed loan summary on how it's going to look for that particular house, right? To make sure that they're not getting into something that they can't afford.
Right.
So yeah, I mean we absolutely make sure that's the case before you even make the offer on the house. You're going to know exactly what your payment's going to be, and I can absolutely give you a range of what to look for purchase price wise, depending if there's HOAs or not. Kind of doing an average of taxes, I can absolutely give you like kind of target max to look at price-wise. So when you're out there with your realtor, you can stay within that boundary. But again, before you make an offer, just text me the address. Most lenders are you're going to call them and they're going to just give you a piece of paper that says you're pre-approved, and that's it.
That's it.
And sometimes it doesn't even have a rate on it, payment on it, and it's literally just a piece of paper saying you're pre-approved, and then you're kind of shooting in the dark.
Yep.
And you have no idea what's going to happen in the end. So, and then people get very surprised when the loan disclosures actually go out, and they're like, oh my gosh, what's all these costs? How do I afford this? See, we're completely 100% transparent here up front from the beginning, so you're not going to have any of that horrible experience that other people do have. The other thing you're asking about, like why people don't call, they're afraid of their credit getting pulled. Mm-hmm.
Yes.
Because a hard credit pull can affect your score by like 8 or 10 points. You do get those points back after 60 days. It's not a massive deal, but they're worried about that. Mm-hmm. So the other great thing at Ray, do what's called a soft credit check. That's not going to have any effect on your credit score whatsoever. It won't even show up as an inquiry. And we're able to figure everything out on that. So once you're ready to once you go into contract for a house and we know you're going to be closing on a loan, that's when we'll pull your credit. So then you'll have the score go down a little bit at that point. But even if you're working with another lender, please do call us, because compare apples to apples. Not all lenders are the same, and not all lenders have the programs that we have, as far as, we have programs to make your offer very strong. You probably heard about the cash ready. Mm-hmm. There's just so much stuff. So
there's so much stuff. Back to credit scores for just a little bit. I know
Sure.
we touched on it. What is something that can move the needle the fastest that somebody can do right now and in 30 days their credit score can increase?
Okay, so something that I'm doing right now, literally, as I walked in here, I was in the process of doing it. Someone got me a letter removing them as an authorized user on someone else's credit card, because that someone else's credit card had a $5,000 credit card limit, but they had $49.99 charged on it. So, and because she was an authorized user, even though it wasn't her credit card, that was affecting her score dramatically, like by 100 points or more. It's gonna change it. So she just got me the letter removing her as the authorized user on that account, and we're gonna get her score up 100 points in 2 days. Stuff like that, people just don't realize can happen that quickly. The other thing that can quickly move your score up is it's all about credit utilization, okay, and what your credit limit is and what the balance is on that card. If you have a credit card with a limit of $1,000, in your head you tell yourself your limit's $300, because they don't want really more than 30% utilization used on the credit cards. Because think about it, like if credit cards are charged to the max, that means you're kind of financially in each month you're living month to month. You really don't have a lot of available credit because you need it. So it makes it more risky for a lender to take that on. So that also, the credit bureaus know that, so they'll make your score lower, right? So, but that's the fastest way that I can advise people exactly what to do, what to pay down. You actually don't want to pay stuff off completely. I know it doesn't make sense. You still want to have a balance on there. So, but we could tell people, say they have $1,000 to try to get their credit score up, where to apply that $1,000 to get the best bang for your credit score buck.
Cool.
because
Cool.
So.
And I've heard mumblings of this in the past. What are your opinions on, like, you go to Amazon and you have split payments on all of them?
Okay, great. I'm really glad you brought this up. No, super glad. Because what happens is, as a lender, when we pull your credit and we're figuring your debt to income ratio, we're just seeing like credit cards, car loans, student loans. Most of the time, those Affirms, what else are there?
Klarna, something like that, yeah.
Buy now, pay later, basically. Most of the time, they don't show up on your credit report. And here's where it can really get you as a problem. Because once the loan goes to underwriting, we analyze everything. We're like financial doctors. We're looking at your, most documents that that are more that you wouldn't really show anyone else. You're going to be showing us, like your W-2s, your pay stubs, all your bank your bank statements for the last 2 months. So if an underwriter goes through that and starts to see all these little payments to Klarna or to these other places, they're going to question, okay, these payments are fine, but how long until that debt's paid off? Like, how long are you going to be needing to make this payment? Because if it's over a certain period of time, if it's going to take you longer than 10 months, then we have to count that in your debt to income ratio if the payment's going to be longer than 10 months. So it's a lot of paperwork involved, because you got to go to those sites and you got to print off each one that you did and where you're at in the payment process, and then underwriter's going to want to look at that just to make sure we don't need to count that in your debt to income ratio, because we might, and it could possibly, if your debt to income ratio is right at the limit, it could cause maybe a loan to be not approved. We would solve it. The way we would most likely do it is just, have you pay it off at the closing or something. Yeah. Just fully, and we would still close. We always make it so it still works. So, but that could potentially happen. And, right after Christmas, a lot of people have that going on, right? So it's not it's not horrible that you have it. And I'm not saying you can't get a loan because you have it. It's just that we got to definitely communicate with your loan officer, because a lot of times we don't know that, because we're looking at your credit. We don't really see that until an underwriter digs into it, or till you provide your bank statements, and then, oh my God, there they are, type of thing.
Yeah, totally. So, with as personal as this business is, like, people's finances are just very valuable to everybody. Yeah. And what makes you trustworthy? What makes Rate trustworthy? Why? Sure. Why go through this anyway? It's very personal.
Yeah. Well, we do try to make it as easy as possible too. So Guarantee Rate was established in the year 2000. We're a local company here.
Where I was born.
There you go. Our owner, Victor Tardelli, he created Guaranteed Rate, and the whole purpose of Guaranteed Rate was to serve the realtor and the client in the best manner possible, and make the process as fast as possible. The whole goal from his first starting Guaranteed Rate is he wanted to be able to clear loans or have loans closed in 10 days, which back then was unheard of.
That's
that's
crazy.
It was like 60, 45 days, no matter what. We're closing loans in 10 days now consistently, like unbelievably fast. It's crazy.
That is crazy.
And it all has to do with the technology. Obviously, we're all in the AI age, and Guaranteed Rate. I keep saying Guaranteed Rate. Now it's rate. we lost the guaranteed part.
I remember it as guaranteed too. So like whenever I'm like, hey Siri, take me to Guaranteed Rate. So whatever.
So we're obviously, Rate's an amazing mortgage company. You can go online, see our reviews, especially my branch here. I've been in the community here for 25 years. I've been with Rate for the last 8 years as a producing branch manager. We have a bunch of loan officers in the office here. So, but we try to make the process as simple and as secure as possible, for sure. Because we're like you said, we're like financial doctors. It's like going to, you don't want to go to the doctor. You don't want to go to us because we're not going to look at all your stuff.
Right.
So we try to make it absolutely as simple as possible, and we have done that through technology. So we have an app called the Rate app. You just type in Rate in the Play Store. You'll see it's got awesome reviews. It's one of the best financial apps out there for a load of stuff. There's all kinds of stuff, even over and above just getting a mortgage pre-approval in there that we have in there. That's really awesome. But basically, when you do your pre-approval in there, it's going to ask you for permission to verify your income electronically, to verify your assets electronically, and as long as you give those authorizations and your employer is a part of it and your bank is a part of it, which many are, sometimes we don't need anything from you. Literally awesome. Nothing. So because we're able to verify the employment electronically, the assets were verified electronically. What we'll need from you is to get a homeowner's insurance quote. Give us your homeowner's insurance policy, because that's you got to get homeowner's insurance when you buy a house. But that's how we're able to clear these loans to close in 7 to 8 to 6, 7, 8 days, clear to close, and then we're closing on the 10th day. It's happening consistently over and over. So it's really incredible. Now, if it's a little bit more complex, say you're self-employed and you want to get the best rates, so you want to go full documentation. So if you've had a business and you've owned it for more than 5 years, we just need to see the most recent year of tax returns. So that can be uploaded securely through the app or on our site, and then our AI analyzes it, and we figure out what the income that we can use for that. Alternative ways of self-employment people to verify income is they can upload their last 12 months of statements, like where all the money goes into, and then we analyze those deposits, and then we figure out your income that way. So there's a bunch of different ways of doing it, but we try to make it as easy and seamless and secure as possible, and guarantee and rates. We're the largest purchase lender in the country for a reason. Realtors know and trust us for a reason.
Which is cool.
Yeah, cool with it's cool.
So going back to down payment help.
Yeah.
How do I qualify? How do I know that I qualify? What are the steps?
Right.
How much do you get? All the things.
Right. Okay. So we have about 15 different options here at Rate currently for down payment assistance in our area. There's options in other states as well. We can work in all 50 states, and they all range with different guidelines as far as minimum credit scores, what the rates are, how much assistance you get, is it forgivable assistance, do you have to pay it back? So they're all different, right? But that's literally what I get paid for. I mean, that's my job. That's not your job to figure out what the best one is. So we're going to figure out, I can give you some options, and I give you my opinion of what I would do if it was me. That's usually what I do, give my honest opinion. But, we're going to lay out the different down payment assistance options for you. There's IDA, which is an option in Illinois. We have IDA funds, which is they can give up to $10,000 in assistance. That one you have to pay back, or they have a $6,000 one you don't have to pay back. So it depends on how much money you need. Depending on which one you would use for that. We have also FHA down payment assistance programs that give either 3.5% or 5% of the purchase price. So the minimum down payment for an FHA loan is 3.5%. So we have one that gives the whole down payment plus some more for closing costs, the 5% assistance. Those go down to a 600 credit score. They also have no income limits, and you don't have to be a first-time home buyer.
That's awesome.
Yeah. So like IDA, they have some income limits. You don't have to be a first-time home buyer with them, but there's limits on income. There's limits on purchase price. You know, they have some rules there. Some of these you have to pay back. Some of you don't have to pay back. It really just depends on, like I said, we would lay out the options and see. A big question when you buy a house is, how long am I going to live there? Is one of the big questions on what loan you should get. Here's a great example. Like if someone's moving in town because they know they're on like a work thing that's only going to last 2 years or 3 years, and then they know they're going to be transferred again. Why wouldn't they go with a 5-year ARM, which is a 5-year? It's a 30-year loan, but the rate's fixed for 5 years at a much lower interest rate than a 30-year fixed loan. So, for example, the FHA 30-year fixed today was like at 5.99. And I really, honestly, I got to look up the ARM, but I want to say it was almost in the fours. It was like 4.9. It was like a point less. It might have even been lower than that. But what's cool is in the rate app, you can go ahead and type in your scenario, and it'll give you your exact, quote on interest rates as of today's rates with payments. You can put in the purchase price, the taxes. It'll give you everything if you just want to play around in there. And there's also all kinds of financial videos that explain a lot of things that I'm talking about here as well.
Cool.
Yep.
Cool. What are the biggest self-sabotaging moves that people could make?
All right. So they say they want to buy a house, but then they go and, they have a car that's paid off, they're just out of college, but then they go to the dealership and they buy a Mustang.
You know what? It's a cool car.
Or a Ford Raptor, and so now they have a $700 payment. So now instead of being able to qualify for a $300,000 house, you can only qualify for a $200,000 house because you got this car. What do you want to do? Which one or the other? That's the self-sabotaging thing. Charging up your credit cards, that's going to sabotage your credit score. It's not bad to have like numerous credit cards. As long as they're used correctly, it's fine. It's actually better to have more available credit to show the credit agencies you have this credit, but I don't need it. But it's there if I want it,
It's so tricky. Like
it is.
So backwards.
Yeah, but there are some people that come to me that have no credit at all, no credit score. And you can still get a loan with us with no credit score. So that's definitely, absolutely still possible. We do verify other type of things like, do you pay your cell phone on time? Do you pay utilities on time? Do you pay your rent on time? Those type of things. But it is possible, even if you don't have a credit score. It's actually better than having like a really low credit score.
Really?
Yeah.
Interesting.
Yeah. So
that's kind of cool.
Some people never got a credit card, never got a car, and they just have no score.
Fiance's that way. He's like so against a credit card, and I'm like, Carter, it's time that we move on from this.
The best advice is to at least have 3 credit cards, at least. And just keep them all underneath the 30% limit. What I tell people is get the card, go charge a tank of gas on it, and then just make the minimum payment until it gets close to zero, and then charge another tank of gas. Because you making that minimum payment on time is what they want to see, that you can make an on-time payment. It's really simple to set up, too. After you get the card, just do the automatic thing for your checking account. You don't have to think about it, right?
Yeah.
So, and that you're building your credit score just automatically just by setting up that automatic minimum payment feature.
Cool.
Yeah.
I like it. Yeah. I like it. Do you have anything else that people should know?
It's very important that you're working with the right team, and experience does matter. I know Kate's a little bit newer in the industry, but she's backed by years of experience. Myself, 25 years. Her mom is almost the same. And the team is fantastic here at Team Open Doors. So I'd highly suggest if you're looking in the McHenry County, Woodstock, especially Woodstock, that's where your home base is, area, to give Kim Keefe Team Open Doors a call, and Kate will be helping you with the home search. So is it okay to ask you a couple questions?
I guess.
So
seatbelt on, ready to go. As long as it's not any more math, I'm okay. It's fine.
Okay. I just want to ask so what are you, like, as far as like demographic? What's not demographic? It's called like millennial. You're not millennial.
I'm a Gen Z.
Gen Z. Okay.
Or a zillennial, if you really want to be very specific.
Okay. All right.
I kind of don't fit into the Gen Z of it all, but I also am not a millennial and do not claim to be one.
All right. I want to know, and I want to be able to. I want us to be able to change. The average age to buy a house in this country is
40 years old
now. When I first started, it was 26, 25 years ago. So now it's 40. And they're losing. The country is losing so much wealth because of the, real estate historically has always gone up in value. There was 2 times in history where it went down in value, and we fixed those problems with the financial crisis, with the bad mortgages. There was 2 times in history that the eras in history, like in 2008, where the housing values went down, and they didn't even go down that much. It was like 10 or 12%. But every other year, you look at a chart since 1946, it's in the green, always.
Yep, always.
So you're constantly in the green as far as gaining equity. In some years, like in 2020, it was like 22% one year it went up. So those people just made bank.
COVID years are just crazy to me.
Yeah. So my question to you is, why do people decide to pay rent and not buy a house? Like, what is happening with your generation?
I truly think, just with knowing people my age, it's just they don't know where to start. They don't know who to talk to. I wouldn't have bought a house when I was 22 if I didn't have my mom in the business. I would have no idea. It would have been the last thing on my list of things to do. I would have bought a car first.
Right.
I wouldn't know that it's accessible. I wouldn't know that that's even an option. Coming off of college and student loans and working full time, it's just not one of my priorities.
I mean, it's one of the reasons we're trying to do this, try to get the word out, right, to educate. But it really is. It really needs to change, because it's just, you're losing out on so much wealth. Just like, when you invest younger in your 401k, you're going to have more money in the end. It's the same exact thing when you're buying a house. I bought my house in 2017, and I bought it for $199,000.
It's pretty good.
Okay, and now it's approaching like 400.
That's awesome.
So I mean, it does over time, add up, right?
Absolutely.
So,
and I saw a crazy statistic of something you sent me a couple weeks ago, that it was like 40 or 60% of homeowners have more wealth than renters, or something crazy like that.
Yeah, we'll put it on the screen. I'll find it, but it's more than that, I think.
It was insane.
Right.
I was like, oh.
Yeah, think about it. Renting, you're just throwing your money away. You're paying someone else's mortgage, and when you pay that mortgage, you're paying down their principal, and you're making them gain more equity in the place that you're living in, that you can't have a pet in, that you can't paint the walls, that you can't make your own.
Yep.
And for the same payment, and probably less money down, because like I was showing you up front, it's going to be most likely less than first month's rent and security deposit get into a house.
Yep.
You can own that house, and every time you make a payment, you got to think about it as a different savings account. That principal that you're paying down is just going into the walls of your house. Like, it's a savings account in your house. Because not only is your house appreciating in value each year, but you're paying down that mortgage each year, right? There's even ways to accelerate that and pay it down faster. But if you got to pay to be somewhere, to live somewhere, why would you? I mean, you're kind of kicking yourself in the rear end if you're just renting, right?
Yep. And something about when we first bought our house, it was such a change. We were paying less money than we were renting. And the first hole I put in the wall and the first lick of paint, I was like, oh my gosh, this is the coolest thing ever. I was so excited.
Yeah. How about the day you got the keys in your hand? Tell about that day.
That was a crazy day. So a little thing about home buying is that you have to warm up your wrists before you walk into that closing table, because I felt absolutely like I was the most famous person in the room. I just autograph. But it was super cool, and just walking into the empty house afterwards, I was like, oh my gosh, this is such a huge milestone. And my fiance and I were just so proud of ourselves.
Right.
So
yeah, it just makes you, in a better place, a better mindset, right? So, well, feel free to please download our app. It's a financial and personal wellness app. There's a whole personal side to it that you can yoga, meditation. There's all kinds of stuff that we offer people that help with their whole being, really.
Yeah.
We're trying to help everyone with finances, their wealth, their personal well-being. It's all there in the Rate app. And then also, if you want to learn more, please reach out to Kate. She can get you started and point you in the right direction as far as getting started on your home ownership journey. So we're so happy to be able to share this with you, and please share it with your family and friends or anyone else you think could benefit. Thank you so much. Bye. We'll do this, one of these.
Perfect.